Qualcomm Stock, ticker symbol Qcom. This stock is up 41% year to date, massively outperforming the S&P 500, and it has been an interesting ride so far. Qualcomm reported a beat on EPS and revenue most recently, and for the upcoming earnings almost all analysts expect another beat. And people love Qualcomm stock for different reasons. And one of them is the dividend. And I understand why, with dividend yield at 1.75% and 20 consecutive years of dividend increases. If we look at the total returns in the past 5 years, we see that Qualcomm stock massively outperforms the S&P 500. So could this be the perfect time to buy Qualcomm stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I'll build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Qualcomm do? Qualcomm develops and licenses wireless technology and designs chips for smartphones. The firm is also the world's largest wireless chip vendor, supplying nearly every handset maker with leading-edge processors. Diving into the earnings, we see that Qualcomm reported a revenue of $9.4 billion, up 1% year over year. EPS was reported a little over $2, up 36% year over year. And this looks really good to me. The biggest segment, QCT, reported a revenue of $8 billion, up 1% year over year. And keep in mind, this is by far the biggest revenue segment. It also has to be said that this $8 billion is above guidance midpoint. EBT margin was at 29% with a big increase year over year, and at the high end of the guidance range. The second segment, QTL, reported revenue of $1.3 billion, up 2% year over year. The EBT margin was reported at 71%, the midpoint of the guidance range. In total, Qualcomm returned $1.6 billion to shareholders, including $0.7 billion in share buybacks and $0.9 billion in dividends. They also increased the annual dividends with 20 cents. And as mentioned a second ago, the QCT segment is by far the biggest. And in here we see that the sub-segments, with handsets being the biggest revenue source, is up 1% year over year. So this is something to keep your eye on. We also see slowdown in iPhone sales in the past couple of years. These kind of things will also slow down Qualcomm's biggest revenue segment. Automotive, the smallest sub-segment here, is up 35%, which is really nice. Internet of Things, the second largest sub-segment, is down 11%, so definitely keep an eye on that segment. Now that we know a bit more about the company, it is time to check the fundamentals. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Qualcomm stock is a $223 billion market cap company. PE ratio is at 26, indicating they could be overvalued right now. Later in this video I will show you my 3 price targets for Qualcomm stock, so make sure to watch until the end. Revenue is at $36.4 billion, and in this graph we see that revenue went up in the long run, not always at a steady and consistent pace. Last year the revenue went down, and right now it is kinda stabilizing. Gross margins and operating margins are coming down in the past decade. Looking at the net margin, we see that it is kinda steady after the decrease in 2023. Margins are increasing again most recently. EPS is looking pretty good. In the long run it is going up. The only thing is that I do prefer a bit more steady and pattern here as well. Analysts expect that EPS will increase a decent amount in the coming years. It is expected to see roughly 12 to 13% growth in 2024 and 2025. After that, I expect growth to slow down a little bit. For the revenue, analysts expect around 7 to 8% growth in 2024 and 2025. For 2026, they expect growth to slow down here. Return on assets sitting at 16%, which is a great number. Return on equity looks really good, but the most important number, return on invested capital, is sitting at 14%, which is a great number. However, it is lower versus the 5-year average, which is not a good thing. Current ratio is at 2.6, which is a high number. The fact that it is increasing lately is also something that I don't like. Right now, Qualcomm has 15 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Qualcomm has 14 billion in total cash, so they can't pay down almost all of the debt. This is something that I really like. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run. However, it is again not really steady and consistent. Shares outstanding are decreasing, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in a company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, the dividend yield is sitting at 1.75%, which is a great number. Annual payout is at $3.4 and payout ratio is around 35%. I prefer 50% or lower, so right now they have 65% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at 5%, which is a low number, also considering the yield and payout ratio. They increased the dividends for 20 years in a row, which is really impressive. And if you take a look at these numbers, the dividends paid since 2012, you see that Qualcomm did increase the dividends at a decent pace. However, growth is slowing down over the years. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that payout ratio is coming down over the years, which is something that I really like. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a similar rate versus previous years. And overall these dividends look really good to me, but how about the historical returns? I decided to compare Qualcomm stock with the overall market, in this case the S&P 500. Next to that I added AMD and Intel. On the 5-year chart we see that Qualcomm massively outperformed the S&P 500 with almost twice the return, and this is including dividends. AMD had by far the highest return here, and Intel is in the red with minus 16%. On the 1-year chart things look pretty interesting, with Qualcomm sitting at 92% return, triples the S&P 500, and AMD is sitting at 54% return. Intel is again lagging behind. On the 6-month chart it is again Qualcomm that is having a massive return, and we see that Intel is sitting at minus 27%. On the 1-month chart it is again Qualcomm that is beating everyone in this list with massive returns. Bottom line, Qualcomm beats the S&P 500 in the long run, and in the short run they were also capable of crushing some competitors. So could this be the perfect time to buy Qualcomm stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 3, 5 and 7% based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm putting in 21, 23 and 25%. For the free cash flow margin, I'm putting in the same numbers. For the PE ratio and price to free cash flow, I'm putting in pretty high numbers for a slow growing company. We're filling in 20, 22 and 24. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now, Qualcomm stock is around $197. I hit analyze and we see a lot of red numbers. We have a low price target of $96, we have a mid price target of $129, and we have a high price target of $173. To me, the high price target is the most justified here, meaning the stock is overvalued based on these numbers. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on Qualcomm is that I like the business. I used to own Qualcomm stock and I bought shares around $100 if I'm not mistaken. I sold around $150, again if I'm not mistaken. Did I sell too quickly? Well, looking at the current stock price, yes. Based on the numbers back then, the information we had and the things that happened in the past couple of months, well, with all these things in mind, I don't think I sold too quickly. These things happen, and this is also pointing out that sometimes things go the other way than you expected them to go. Looking at the current fundamentals, I think the company is looking pretty good. The only concern I have are the margins and current revenue growth. Other than that, it looks pretty good. Dividends are also looking really interesting, but I would love to see a higher growth rate here. Last but not least, the valuation is showing that the stock is overvalued right now. So I'm skipping this stock, but I keep them on my watch list and analyze them from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.